In this video, we're going to look at an average retirement plan with $1.7 million in financial assets. Now, why $1.7 million? Well, there was a recent survey that came out that suggested that the average Canadian believes that they need $1.7 million to retire. Now, having done a lot of retirement plans, this number does feel a little bit high. This survey did come from a large bank. The banks are in the business of selling financial products, so I suspect perhaps there's a little bit of bias there, but let's give them the benefit of the doubt and let's build a retirement plan, an average retirement plan with $1.7 million of financial assets. And let's see if that really is the right number. Now in this video, I'm just going to give you a brief overview of this plan. If you want to see how we built this plan step by step, don't forget to like and subscribe to this video and hit the little bell notification icon. We're going to be coming out with a video with each step in how we built this plan. And we're also going to look at some other scenarios with maybe a lower amount of financial assets that perhaps is a little bit more realistic for the average Canadian household. Okay, so let's go over this retirement plan together. Before we get into the details of income and expenses, let's go down here to the profile. Let me introduce Bill and Louise. So Bill and Louise, they're turning 65 this year. They left their employment last year, so they don't have any financial income right now. They haven't started CPP and old age security quite yet. One of their questions is, should they start it at 65 or should they perhaps delay until age 70? Now, Bill and Louise, they don't have any defined benefit pensions. They own a home, they own a vehicle. There's no vacations or rental properties to worry about. They have over $1 million financial assets, no income right now. They do have a home equity line of credit, but there's nothing on it. So it's just buffer in case they need that, in case of emergency. And they have financial assets in RSP, TFSA, and non-registered accounts. So let's start here with income. We're assuming no income at the moment. So no CPP, no old age security, no defined benefit pensions. So if we go over to expenses, we're going to assume average spending in retirement. The average, according to Statistics Canada from 2020, after tax and retirement was $64,900 per year. We're going to go up a little bit higher. We're going to assume some inflation. We're going to aim for about $75,000 a year in after-tax retirement spending. This might be a little bit above average, but we're going to use this as our initial estimate. We've added some assumptions here for property tax, utilities, home repairs, maintenance, vehicle upgrades in the future, repair and maintenance. We've got $1,000 for food cleaning staples, some money for restaurants, entertainment, $1,000 a month total between the two for vacations and travel. So that's $12,000 a year for vacations, travel. We're assuming a little bit for out of pocket for maybe dentist visit, but we're assuming that prescription drugs are covered by the provincial pharmacare program. And we've got some miscellaneous expenses. We're assuming about $1,000 a month between the two of them, $12,000 a year in miscellaneous. No savings debt payments. If we can, we'll add to the TFSA in the future, but we're not going to assume that in the base plan. So we've got $75,000 a year in spending that we're aiming for after tax. We can see from their cash flow, that's about $6,200 a month. No income right now, so it's a gap, but we're going to make that up with CPP, old age security, and investment withdrawals. In terms of assets, we're assuming, again, 1.7 million. So that's the number that the survey suggested. To get there, we have some pretty big account balances. So we've got $500,000 in RSPs. We've got TFSA investment balances, about $150,000 each, probably maximized since 2009. And we've got a little bit of non-registered, so about $195,000 each, and a cost base of $135,000. So about $60,000 in capital gains that'll get triggered in the future. No contribution room, but they'll earn more TFSA contribution room in the future. $1 million home value and a vehicle that's maybe a few years old. So $16,000 there. No debts, but we're assuming that there is a home equity line of credit with a zero balance. Could be used in case of emergency in the future. Overall net worth, 2.7 million, 1.7 or so in financial assets. And for tax and benefits, because this is average, we've just assumed that at some point they started to contribute to CPP. Now, to get to the average, was about $9,000 a year in CPP benefits. We're assuming about 20 years of CPP contributions. So a lot of zero earning years here, which is maybe not the most realistic. Your situation might be different. We're also assuming 47 years in Canada, so they're going to get the maximum old age security benefit. And for CPP and OAS, when we look at the numbers, this leads to about $9,000 a year for both of them from CPP and about $8,200 a year, the maximum from old age security. So combined, if they start all those benefits at age 65, we've got about $35,000 a year just from CPP and old age security. So almost half their retirement spending covered by CPP and OAS. Now, let's go down to projections and see how all this rolls together. So we'll let it calculate and we'll see what the projections look like. Already we can see with so much financial assets, so much in RSP really withdrawals really dominate this plan. So we've got CPP, old age security, RSP withdrawals, registered withdrawals, a little bit from non-registered to make up the difference. But you'll notice there's no TFSA withdrawals. So that's already a clue that perhaps 1.7 million is too much. Now spending, we've just got $75,000 a year here, and then overall net worth, it actually grows in retirement. So pretty good indication that 1.7 million is much too much for the average retirement plan. So if you're aiming for average retirement spending, $75,000 a year, if you've got average CPP and old age security, 1.7 million is really not the right number. So here success rate is very high because of all the financial assets. Now let's take a look at what happens if maybe we add more spending. So $1.7 million is great. They've got all these financial assets. Let's see how much spending they could actually support. So we're going to add maybe $40,000 a year here in discretionary spending for the first 10 years of retirement. So we're going to assume that they're spending a little bit more on discretionary travel, other things in the first 10 years. Let's take a look at what that looked like when we recalculate the plan. So here, a little bit more realistic. We still have over $1 million in TFSA at the end of the plan. Success rate, it has gone down a little bit. You know, we are spending a lot more in this plan in the first 10 years, so there's a bit more sequence of returns risks. Are we worried about that? Not necessarily, because that $40,000 a year is entirely discretionary. So if they need to, they can cut back on that discretionary spending if there was a poor period of investment returns or high inflation rates. So if we look at spending, very high for the first 10 years, back to $75,000 a year as of age 75. But to be honest, I mean, $75,000 a year was already quite generous. So with 1.7 million, you can afford much more than the average retirement spending in Canada. Income, we're drawing more heavily from the non-registered account now. Probably a little bit of tax planning we can do here to maybe smooth that out a little bit. But in general, fairly good plan in terms of tax planning and benefits. No old age security clawback, so they're still getting the maximum there. And overall net worth, they still have quite a bit at the end, you know, in case they need to absorb higher inflation rates or maybe some poor investment returns or maybe in-home care or long-term care. So what does this tell us? Is 1.7 million the right number for retirement? Probably not. It's probably something much lower than that. Maybe in the $1.1 million range. Over the next few videos, we're going to take a look at what the right number is for the average retirement plan. So if you're actually aiming for $75,000 a year in spending and not $115,000, then we're going to take a look over the next few videos at what the right number is to aim for in financial assets. So if you enjoyed this video, please like and subscribe, hit the little bell notification icon, because over the next few videos, we're going to be looking at what an actual average retirement plan looks like. Thanks for watching.